Hi everyone, this is Mrs. V Chan. Welcome to my Form 4 Accounting lesson number 11. Today is 23rd March 2020. Okay, so we will look at some DSE question on allowance for doubtful debts. Okay, so here is the question in 2016. Alright, so we are given this aging schedule, which is new to us. Okay, and then I will explain to you later. Okay, and let's see the things that we have to do in this question, which is based on the above information, calculates the balance of the allowance for doubtful debts accounts. All right, so remember what is allowance for doubtful debts account, which is a real account. So therefore we are going to show this to put this in the statement of financial position. And also allowance for doubtful debts account is a credit item. And also because of prudence concepts, we estimate the amounts that we may not be collected from our customers. So therefore, here is the current assets. So we will have accounts receivable, so which is a debit item, and then we put this together with allowance for doubtful debts. So this is credit, this is debit. So therefore, we deduct allowance for doubtful debts from accounts receivable. Okay, and what we need to do in this question is to calculate this figure for allowance for doubtful debts. So before we look at the calculation, so we need to learn what is the meaning of aging schedule, all right? So if you go to your textbook on page 136, so you have the meaning of aging schedule, saying some firms draw up this aging schedule, all right, and then they set different percentage of doubtful debts accounts according to the length of time being outstanding. All right, so therefore you can see here, so we have the percentage, is that right? So remember, allowance for doubtful debts is always a kind of estimation, so therefore you have this estimated doubtful debts. Okay, so if you look at this column, you will see the estimation and the percentage, which is increasing because the longer the time of the debts being outstanding, then the more likely we cannot collect money from the debtors. Okay, so therefore we have this point for aging schedule, saying usually the longer a debt is outstanding, the more likely it is to be uncollectible. Okay, so this is the idea about aging schedule. Okay, and then you look at this column, so we have amounts of accounts receivable. So therefore, how much will be the total account receivable if I use my calculator? So that will be this. Okay, and 6, right? Okay, so this is 690,000. Okay, so this is the idea of this column. So we have total accounts receivable, which is 690,000, and then something happened here. So after preparing the aging schedule, the company noticed that one of the customer who had owed the company 20,000 had declared bankrupt. So what is this had declared bankrupt? That means proved to be uncollectible. So what do we need to do about this? Then we need to do bad debts written off. Okay, and here we have the double entry for bad debt written off. So therefore we debit bad debt, which is kind of expense in the income statement, and then we credit accounts receivable because we need to minus accounts receivable, saying that we have no hope to collect money from this customer because this customer being proved to be bankrupt. Okay, so after this double entry, I need to minus, okay, this 20,000 from accounts receivable. So therefore I have this minus 20,000. So I will get this. So 670,000 in the statement of financial position. Okay, now we can do calculation on allowance for doubtful debts. So this is account receivable for owing from between 1 to 30 days, and this is the percentage. So I have 1% here. And after that, this is account receivable. However, we have bad debt written off. So this 20,000 related to 55 days. And 55 days is in between of 31 to 60 days and times the percentage, which is 3%. And then lastly, we have this 60,000 times 10%. So this is how we calculate allowance for doubtful debts using aging schedule. Okay, so therefore the answer to this question will be 15,300, which is exactly the figure in the statement of financial position for the figure of allowance for doubtful debts. Okay, so here we have another past exam question in 1992, a very old question. So let's take a look at the things that we have to do. We have to draw up bad debts account, and then we need to drop provision for bad debts. Now this is the old name, so the name changed to allowance for doubtful debts for DSE, and then we need to draw up another account for ransom company in these 3 years. Okay, so therefore part A, I have my bad debts account, and then I have allowance for doubtful debts account. I changed the name to the updated name in DSE, and then here I have ransom company. Okay, so let's take a look at the question. So here is the question, okay, which is solar company. All right, and then this is during the first 2 years, the following bad debts were written off. Okay, and then now I need to follow double entry. Okay, and who are these? Wilson, A-Tang, E-Ng, they are all our customers. They are all our debtors, but however, they can't pay us money. So I just do posting, right? So therefore, I put all this on the debit side of the bad debts account here. Okay, and also I have my double entry, debit bad debts and credit trade receivable. So therefore, this is my bad debts account. So I put this on debit side because Wilson, A-Tang, who are they? They are customers and they are trade receivable, like that. Okay, so since we need to draw up ransoms account, so that for this double entry, okay, so we credit that here, 11,200. Okay, so in the year of 1989, a long time ago, and the date for bad debt written off is October 11, and then the reason is bad debts, like that. Okay, now I can close my bad debts account. And remember, how do we close? We have nothing here on credit side, so we put total 20,000 at the bottom and 20,000. And remember, what is bad debts account? Which is a nominal account, so that we don't have balance carried down. However, we'll have this altogether total bad debts. Okay, so the last date, that will be 31st December. So we don't have balance carried down because this is nominal account. So we will put that to where? To the income statement, so which is the profits and loss account. So this is how I close bad debts account. Okay, so next I need to look at this provision for bad debts. Again, I changed the name to allowance for doubtful debts. So since if you look at the condition here, it says solar company started its business in 1989. So therefore, in this year, which is year 1, okay, and also this is the percentage on debtors here. So debtors is the old name, so I changed that into trade receivable. Okay, and look at this 250,000. So actually, this is already after. So all these figures already after bad debts written off. And how do you know it is after? Because the information here saying the following bad debts were written off. That means we already have all the bad debts here being deducted from trade receivable. Okay, so therefore in year 1, so which is same as in 1989, I need to provide allowance for doubtful debts, and this is a usual double entry. So debit profit and loss and credit allowance for doubtful debts. So that here, this is my allowance for doubtful debts account. So 1989 actually is year 1. So we provide that at the end, which is 31st December. Okay, so because of profits and loss account, and the calculation is 5% times trade receivable, which is 250,000. So I use my calculator here. So 250,000 times 0.5, so 11,500. So this is what we have in year 1. So since allowance for doubtful debts account is real account, so that we will have balance carried down. So this is 31st December, so balance carried down. which is same as the closing balance in the first year. And this closing balance in the first year will be the opening in the next year, which is in 1990. So I put balance brought down to begin with. So I put 11,500. Okay, next we have 1990, which is year 2. So I just follow the same double entry for bad debts written off, which is debit bad debts and credit trade receivable. So this here, so therefore here I have my posting. This is the bad debts account, and then I post this all on debit side. Okay, so who are they? They are customers. Okay, and then they won't pay us money. Okay, so now after this posting, I can close it because bad debts account is a kind of nominal account. So I just use my calculator to close it. Okay, so this is the amount, so 4,000 plus 32 plus 1,200. So altogether I have this one for 7,200. So here I also have 147,200. Okay, because this is nominal accounts, 147,200. We closed on the last date of financial year, and this is nominal, so I close this to profit and loss accounts. Okay, next we look at the information for allowance for doubtful debts. So this is the second year, which is in 1990. The estimation is 8%, and here we have the amounts for total trade receivable. Okay, so now let's take a look at the allowance for doubtful debts account. So now we come to year 2. Remember, so when we do this allowance for doubtful debts account, which is the real account, real means what? We have opening balance. Always remember the sequence. Number 1, opening. Remember number 2. Number 2, always go to closing. So how do we get closing? Which will be the percentage, which is 8%, and times the total amount of trade receivable. So here, this is the closing balance. So closing is larger than opening. That means we have to provide more allowance for doubtful debts. And then how do we change from 11,500 to this much? We need to do increase in allowance. So what is the double entry? To debit profit and loss and to credit allowance by the change. So how much is the change? 53,600 minus the opening balance 11,500. So I will have this 42,100, which is the change. So that I have close my account in this way. I close it in this way. Okay, so this is the closing in 1990. Will be what in 1991? Will be opening. So 1st of January. Therefore, I start with this opening. 53,600 like that. Okay, so therefore we have finished bad debt written off. Okay, and then we have finished year 1 and year 2. Now we come to the 3rd year, which is 1991. Okay, here we have another information saying on 20th February 1991. So this is the 3rd year. A check for this much from Remsen was received in full settlements of the accounts previously written off as a bad debts. Actually, what happened? We received full amounts from customer, and this is Remsen. So therefore, what happened to this? We exactly have what? Bad debts recovered. Okay, in 1991 on 20th February like that. Okay, so here is the double entry for bad debts written off. So actually we have 2 double entries. The first one is bad debt recovered is exactly opposite to bad debt written off. So therefore bad debt recover is a credit item, and now Remsen has money to pay to us. And then the second double entry is about receiving money from Remsen. So actually, which point is more important? So this point is more important. So if we don't have money received from debtors, we don't say that this is bad debt recovered. And now I need to do my posting. So here I already have my Ramson company accounts. All right, so don't worry about this 1989. We will look at that later. So here is 1991, and then we have this double entry. So debit Ramson. Okay, so here is debit side. So I put 11,200, and the dates for better recover is on 20th of February. Okay, and the reason is that's recovered, right? Okay, and the second double entry is debit bank. We have money received, and then credit Ramson company again. So here I credit that again. So the date is here because of bank. So no more. Okay, I have closed everything in Ramson company accounts. Okay, let's check. I have bad debts account all completed. This is nominal account, so I should close it to profit and loss and close it profit and loss. Okay, and what about allowance for doubtful debts account? Now I need to complete all the things in 1991, which is the third year. So always remember the sequence. Number 1, opening balance. And number 2, we go to closing. So to close it, which is on 31st December, okay, balance carry down. And then I also need some information in the third year. So this is information in the third year, 1991, 10% on trade receivable, 432,000. Okay, so my calculation here will be 10% times 432,000 times 10%. Okay, so how much is it? I just get rid of 1 0, so 43220, so 43,200. And now look at this. This is closing, which is smaller than the opening. So we have decrease in allowance for doubtful debts. Is that right? Okay, so to decrease in, we have to debit allowance. So here, so the dates to do adjustment is the closing dates. I put the reason is profit and loss account here. Right, so how much is the change? The change is 53,600 minus 43,200, so the change is 10,400. So therefore I can make my debit side 53,600 and also the same as the credit side. So this is how we do allowance for doubtful debts account, which is a real account. Always remember step 1, opening, step 2, closing, and step 3, we get the change. And the change can be decreasing, can be increasing. Okay, all right, so that's all about the past exam question for allowance for doubtful debts. So thank you for watching my video. I'll see you next time. Bye bye.